Bloomberg Audio Studios. Podcasts, radio, news.
It's August. It only means one thing. Economists and policymakers have descended on the mountains of Wyoming's Grand Teton National Park this week for the annual symposium of Jackson Hole. More than 100 participants, including several central bank officials, of course, gather. Market watchers are paying close attention. So today on the show, what do you need to know as this important economic event kicks off, and what signals could central bankers be sending to their economies? This is In the City.
Welcome to the City of London.
The City of London.
The next station is Bank. Please mind the gap between the train and the platform.
The financial heart of the country.
The City.
The City.
Welcome to In the City.
Stand clear of the doors, please.
I'm Francine Lacqua, and with me, back from holiday in the city, and Voternomics host Allegra Stratton.
Hello.
With us in the studio, an In the City favorite, senior reporter Phil Aldrick, also newly back from holiday.
Hey, Francine.
Not on Jackson Hole, Wyoming. I love Jackson Hole, Wyoming, because something always happens. There's a big policy speech, but also you see these, central bankers that we talk about day in, day out in casual wear.
Do they do it well?
I mean, I think they do. They have like the dad jeans,
You're
like
so
the dad
generous.
sneakers. I actually went to buy a pair.
Dad jeans.
Is that really, really sad? Phil's just looking perplexed.
I thought they went fly
banks.
fishing. The sophisticated wellies in rivers and things like that.
I'm sure actually we've seen pictures of, chairmen of big Wall Street banks with the
Waiters.
fly fishing waiters. What do you call them?
I think. Don't you?
Waiters.
We need Dave Merritt here. He's our resident fishing
Fisher.
expert. Yeah, I've seen pictures of Dave in waders, haven't you? Yeah.
I haven't.
This is all veering into non-essential economic commentary.
Or is it? A lot of the focus, Phil, will be on, of course, the U.S. economy. A lot of it will be on all the other economies. But we had a crazy couple of days at the beginning of August because we were worried that suddenly this Goldilocks scenario for the U.S. economy would come crashing down. And I don't know whether that would have taken the UK economy with it.
Yeah, it was crazy. It all kind of unraveled, and then it re-raveled within the space of a week or so. So there was a shock jobs report, and then all the economists, as far as I could tell, thought the Psalm rule was the sort of catch-all for the future outlook for the world. Obviously, the Psalm rule was signalling that there's going to be a recession in the US, but yeah, the UK seems to be going the other way at the moment, doesn't it? I mean, Labour Party's, the inheritance is terrible. The fiscal inheritance is still looking pretty dismal, but the economic inheritance in terms of the pickup in growth has been pretty good this year. So we seem pretty resistant to that.
Phil, is that the story out of Jackson Hole this year, that previously they've been aligned and this year they are going to be coming with different conversation pieces?
Well, yeah, I mean, the story has been that there was a difference between Europe and the UK on one side and the US on the other. The US was like gangbusters economy, and Europe and the UK were significantly slower. And in the UK, like, consumption hasn't even really got back to pre-pandemic levels. So there was always that kind of divergence. But now it's sort of switching track. Now the American economy looks like it's now on a downswing, and the UK economy was on an upswing. Europe is sort of in the middle. So I think that divergence point will definitely be a discussion topic there. And so what would the policy response and how would the divergent policy responses be? And obviously, and when it comes to interest rate trajectory, it's all the same way. It's all down from here.
Phil, why does Jackson Hole matter? I mean, there's a handful of these retreats where a lot of the top central bankers meet. But so you have the beautiful mountains, you have the fishing, it's a bit of a retreat. But then you could also, I guess, have big policy speeches.
Yeah, historically there have been major policy speeches there which have been hugely influential. But the other thing is it's the end of the summer. We're resetting for the rest of the year and into early 2025. And so this is kind of an agenda. It's always been an agenda-setting conference. Well, actually, it was a bit of an irrelevancy until Paul Volcker went, and it was when he was doing his attack on inflation and raising interest rates aggressively, and basically the whole world seemed to be lined up against him. And he went along to Jackson Hole that year. It was very early on in these events, and the entire economic fraternity seemed to just turn on him, and he was aggressively attacked. And that's what sort of made Jackson Hole this kind of this moment in the calendar, was this kind of the excitement then. I guess the way it works and is quite interesting is all these central bankers they've got to kind of show off to each other. They've got to say, look, my brain is bigger than yours, and I've got my policy ideas are going to be more transformative. So there's economies are meant to be competitive, and this is like competitive economists, trying to come up with new policies.
With this year, might you see or hear a little bit of humility, that they don't necessarily feel that it's completely obvious the direction of travel and what they should do? Yes, you're right. When you said earlier the direction, it's all down from here. But isn't there a question about when and speed? And
yeah, so that's where you're right in terms of the divergent aspects of things. I think one of the big questions that they've got to answer, and again you'll see different answers, is now that we are cutting rates, when do you stop cutting? Where is the neutral rate? And no one has really set that out. And if you came out of Jackson Hole still with your finger in the air, after this week, and just wondering, where are we going to end up? And I think that would be a bit of a disappointment. And I'm not saying that they have to set specific numbers, but if that's the real big question that's coming for the next few months, and they don't get ahead of that would be, I think, a little bit of a failure on the policymaking front.
I mean, I guess as Jay Powell's character is usually quite coy, and we've moved away from a lot of forward guidance because in the past it hasn't worked out. But I spent a lot of time just wondering why it's so difficult to model these things, right? I mean, I know we're data dependent, but we've gone through the fastest hiking cycle in the US, in the UK, and in Europe, probably in modern history. And they don't really know when the right time to cut is because they're waiting on monthly jobs data and inflation data. I mean, It feels a bit weird, doesn't it, Phil?
Yeah, because especially as central banks are supposed to be looking forward 2 years, so all of their actions are really anticipating where life will be, inflation will be in a couple of years' time. So they should have a framework with which they can decide that it is time to go. Whether you move 1 month or the next, I suppose, doesn't really make an awful lot of difference. But if you're delaying for ages,
but is it that it's more difficult to read the economy now that it was in the past, or that because you raise rates so quickly you don't really know where it lands?
I don't think the economy is more difficult to read than it used to be. I don't think anyone would suggest that. I guess what has been different is that the speed and pace of rate rises did not result in these sort of outcomes that people were anticipating before they started to do this. So here in the UK, we've done the first quarter point cut, and the sort of markets are now expecting a move every quarter rather than at every meeting. And so that in itself causes a complication. So when you start cutting, normally you just go sequentially because you're cutting into a recession. This time we're kind of sort of feeling our way back to the neutral rate. We're on a rate cutting cycle, but we're not going to cut rates now. We're going to wait. But then why are you waiting? And how do you organize the vote structure within the 9-member Monetary Policy Committee to make sure that you do this? It all becomes a bit strange and a bit of a sort of awkward process to manage.
But the economy is okay, and that's quite surprising. We were talking like 3-4 months ago about a possible, really slowing down, and the numbers are, have come in stronger than expected. So I don't know whether it's now time to worry about overheating or whether we should just enjoy the UK economy relatively stronger than other economies.
Yeah, I think there's not really any signs of overheating because consumer spending hasn't like taken off or anything, and government spending is still a significant, a important part of the growth that we've been seeing. And business investment is picking up, which is a good thing. It could change where you think that the glide path to what. It changes the what in that glide path potentially. Where do interest rates end up?
But it all goes back to also that the fiscal event, when we have the budget. So if you're the Bank of England right now, you're not grappling in the dark, but you just don't really know some of the policies that the new government will put in place and what happens to taxation and what that means for inflation.
Yeah, well, there's sort of suggestions that Rachel Reeves may try and borrow about £20 billion more by maybe changing the debt rules or, changing arrangements around the Bank of England. Bizarrely, the growth has not delivered much stronger public finances. The public finances are getting worse. So it looks like she's going to have to borrow more, as well as do tax rises to compensate for higher spending plans for all these pay rises for public sector workers. So you could see this kind of inflationary stimulus caused by extra borrowing on top of the public sector pay rises, which do have an impact on general demand a bit, and then on the minimum wage, which comes into effect next year, if they do push it up by about 10%, which it looks like they're signaling. So the October budget is obviously going to be a critical moment, and it comes just a day or two before the Bank of England's November rate decision, which is the next one.
Moment,
yeah, it's the next one which they're expected to cut at. So that could prove quite a lively meeting.
So if you're Andrew Bailey and you're at Jackson Hole in your cool trainers and your cool dad
Very
jeans,
cool trainers.
So you've probably got some advisor right now running around trying to source you something that will meet Franz.
Let's say slacks. I don't think I've seen. Apart from Jay Powell, I don't think I've seen anyone wearing jeans.
What will Fran Lacqua approve of? So if you are Andrew Bailey and you're at Jackson Hole, how will people be approaching him? Do people say, "Oh, your experience is interesting," and talk us through it, or is there still a perception that everything is too unique to the UK for there to be much of a read across?
No, I think the UK experience will, to the point of these divergent economies. So what the UK has experienced so far could be feeding into, there'll be lessons learned for America if it is about to go on a slowdown. The coordination of monetary policy between central bankers, which does go on behind the scenes, that's obviously going to be critical, just so that others get a sense of. I don't know. We've had quantitative easing. What we've had here is a very transparent exposure of the fiscal risks of quantitative easing, which the accounting in Europe and America really conceals to a degree. So, but it is still the same problem, just hidden away there a bit. So, there may be some discussions about, we've had time to learn the more of the full lessons of quantitative easing, what our takeaway is. And of course there was the Bernanke review, wasn't there, for that, and like what the Bank of England is doing to upgrade its systems and to overhaul its practices. And
there's a piece, Phil, that I thought was great by Mohammed Al-Arian, who often goes to Jackson Hole, and he was basically saying that that he's been certainly critical of the Fed, and he said, look, the stakes are high for Jay Powell at this Jackson Hole meeting because he needs to get ahead of the communication issue. So Mohammed Al-Arian believes that Jay Powell needs to regain control of the economic and policy narrative. Is that true for all central banks, including the Bank of England? It's all now just communication to make sure that the markets don't go off rail to then need to come back when they kind of call them back to order.
Yeah, I think this is quite a different policy loosening situation. Yeah. Like the communication is going to will be quite difficult, particularly in the US and in Europe. They're also moving slowly. I mean, so far Lagarde has handled that process very well. With the Fed, it is definitely a lot more complicated because that market reaction to that jobs report and the assumption that the US is headed for recession, will put the frighteners on the Fed. The UK economy is recovering, so you can cut rates more slowly into a recovering economy than you would do into a shrinking economy. The trajectory in America is that way. The trajectory is downwards. So the pressure to do more rapid rate cuts in America would definitely be greater than it is here. And yet the economy is still very strong. And there are still signs of inflationary pressures in places. So that is a much more tricky communication problem in the US that they face than we have here. I think we can justify this kind of gradualism more easily.
Thank you, Phil. So I do with a bit more gusto. Thanks, Phil. Thanks, Phil. Thank you, Phil. Hey, Phil. Thank you.
Yeah, thanks very much.
Hey, thanks very much, Phil. Thanks for listening to this week's In the City from Bloomberg. This episode was hosted by me, Francine Lacqua, and Allegra Stratton. It was produced by Summer Sadi. Production support and sound design by Moses Andam. Brandon Francis Newman is our executive producer. Sage Bauman is head of podcasts. Special thanks to Phil Aldrick. Please subscribe, rate, and review wherever you listen to podcasts.